What's going on, everyone? Welcome back to the channel, Courtside Financial. This is a brand new channel. My name's Obi. Make sure you hit that like and subscribe button if you want to be a part of the channel and see where things go. So today's topic is why the rich are getting richer. Clearly, we're in very uncertain times right now, and I kind of want to talk about that. So Business Insider reports that during these uncertain times, billionaires have increased their wealth by $434 billion. Okay, and if we look at Warren Buffett, if we look at Bill Gates, if we look at Jeff Bezos, these three individuals now own as much wealth as the bottom half of U.S. household. Now, why is that? Why are these things happening? Why is the wealth gap widening during a crisis, during a time of uncertainty? Well, first we want to understand what's going on. The wealth gap doesn't only just widen during times of uncertainty. While it might be dramatically widening now, we have to think about times of expansion, economic expansion. Past decade, which was the longest bull market. A lot of you may not know what a bull market is. A bull market is basically when America is in economic prosperity. And now we are in a bear market. And the bear market is the complete opposite. The simple reason that the rich are getting richer is because they own assets. Think about all the people who have to stay at home right now. All the people who can't show up to work because they are considered non-essential workers. And it, according to the CDC, poses a health risk. A Forbes article that came out in January stated that 78% of workers are living paycheck to paycheck. Now, when you think about the wealthy, they don't live paycheck to paycheck. What they actually end up doing is diversifying their income, finding different sources, owning businesses, using the tax code to their benefit, and purchasing assets instead of liabilities. Now, when you're living paycheck to paycheck, that becomes very hard to do. Maybe you lost your one stream of income. Maybe you're trying to figure everything out right now. Investing is the last thing on your mind, as it should be. You know, you have to take care of your health and your life before you get into any of that others. So basically what's going on right now is the Federal Reserve and the central banks are propping up the market. There's a ton of money coming into the market, which is currently driving stock prices higher and higher. When you think about the March 23rd lows, when the stock market crashed by 30%, people who weren't living paycheck to paycheck were in positions to take advantage of these deals. People who had cash on the sidelines were in positions to take advantage of these deals. That's what people mean when they say cash is king. You know, cash isn't king if it's sitting in a shoebox. I actually think cash is trash if it's sitting in a shoebox. Cash is only king if you know how to play the game. So that's exactly why Warren Buffett, CEO of Berkshire Hathaway, and arguably the best investor to ever live, Berkshire Hathaway has $137 billion sitting on the sideline right now in cash. Now you think about these billionaires like Warren Buffett. What is he planning to do with the money? Make acquisitions. People asked him, why isn't he buying stocks right now? And he said because he doesn't really see any good deals. And I would have to agree with that as well. I think this market is very propped up. I don't think that the S&P 500 should be close to its all-time highs. For the past few weeks, fundamentals have been out of touch. You know, there's this disconnect between the economy and the stock market. We're seeing unemployment climb, but we're also seeing stocks continue. I believe that it's best to stay on the sideline and kind of mitigate risk. Back to my point is the rich are getting richer because they own assets, and it's going to continue to be that way. Now, that's what's happening now with the quantitative easing. Now, there's a lot of uncertainty moving on into the future about what is to happen. Sometimes the best way to think about the future is to look at the past. If you had $10,000 that was sitting in a savings account since 2010, your money has actually lost 17.58% of its value due to inflation. Inflation is when the supply of money increases and then there is more money that's demanded for said products and said goods. So the equivalent of spending power in 2020 would actually be $11,757.94. And this is why cash is king if you know how to use it, but cash can also be trash, because basically what's happening is your dollar is continuing to devalue over time. We're assuming this savings account is paying you at a 0% interest rate, okay? Or let's just call it a shoebox for the sake of this video. So now let's assume that you had that same $10,000 sitting in a shoebox since 2000. In that case, your money would have lost about 50% of its value, 48.89% of its value. And the average inflation rate since 2000 has been about 2%, right? So in order to purchase what you need to purchase, the equivalent to your $10,000 in 2000 in 2020 would now be $14,889.02 in 2020. So I hope you guys are all getting the concept of cash is losing its value over time. And this is why it's so important to invest. And this is why the wealth gap is continuing to widen. Now, like I said, this is why the rich are getting richer, because they're putting their money into places like stocks. If the cost of inflation increases, that means businesses are going to demand more money for their products and services. So with that being said, they can expect to receive higher profits. With those higher profits, you would see a higher share price. That's why stocks are assets that increase in inflationary time. Think about real estate. That's also an asset that increases in inflationary times. It's going to take a lot more to now pay your rent. Real estate guys, a lot of them are waiting for real estate prices to fall. I can honestly say during this time so far, what I have in my real estate investment trust, I have actually been seeing only profit. I haven't seen a crash yet, so it's still uncertain as to whether real estate is going to crash or not, but we'll have to see. And if it does crash, it'll be a great opportunity for a lot of these investors to get in, and that's one of the things that further widens the wealth gap. But we'll just have to see. But let's say you signed a 30-year mortgage. Now your mortgage payment is going to be consistent for 30 years until you pay it off. So depending on what interest rate you got, with inflation, it's actually beneficial to you because it's becoming easier and easier to pay off over time. And the things that the rich do that 78% of America who live paycheck to paycheck might have some trouble doing is buying assets. Now, not only to mention that tax policy supports business owners. So if you think of yourself, if you have an LLC, a corporation, whatever umbrella your business might fall under, there are so many ways that you can fairly and legally play the tax code to your advantage. So a lot of people who own businesses, they do things like write things off on their taxes. I'm not a CPA, but maybe a car is part of your business expense. Maybe your cell phone is part of your business expense. Maybe your home office is part of your business expense. Maybe the camera that I'm using to shoot this video is part of a business expense. But at the end of the day, you have to understand how to play the game. You have to understand that times like these are times to gather more information and do everything you can to get out of that lifestyle of living paycheck to paycheck and start investing money in your future, investing money in yourself. Buy some books, acquire knowledge. That's an asset that they can never take away from you. And I do understand that there are people in situations where things might be a lot harder to achieve, but everything starts with your mindset. If you can see it, then it can happen. Everything starts with changing your mindset, gaining perspective all the time, gaining new understandings of the world and things that are going around. This is the perfect opportunity to learn how to better take control of your finances. When we talk about Warren Buffett keeping $137 billion in cash, he's obviously keeping that cash around to make acquisitions. You know, the last few years, everyone was asking, why is Berkshire Hathaway keeping so much cash? And now it all makes sense to a lot of people who never thought that this day was going to come. Statistically speaking, every 8 to 10 years, there is a recession, there is an economic pullback, there is an economic downturn. So it's really all about just being prepared for that moment, making sure that you're taken care of in these uncertain times, and then being able to use this unfortunate event to make you stronger mentally and financially stronger, so that next time when something like this happens, if you were living paycheck to paycheck and you lost your one source of income, then just treat this as a lesson, treat it as a wake-up call, treat it as it's time to diversify, it's time to further protect yourself. Thanks for watching this video. If you have any comments, leave them down below. Again, this is a new channel, so please hit the like and subscribe button. That would really help the channel out. Thank you.